Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. It seems like we are seeing more signs of global trade tensions easing. At least that's going by the latest, with the compromise between the US and China, which will see tariffs being slashed. It follows a trade deal done between the UK and India as well. So are we moving towards more deal-making and less tariff tensions? Let's check in now with Radhika Rao. She is the senior economist for DBS Group Research. Radhika, good morning to you. How are you doing?
Hey Ryan, yeah, happy to be here. Thanks for having me here.
Yeah, it looks like we've got you at a good time looking at the broader trade environment. How would you describe it right now? Is the worst over when it comes to trade tensions and its impact? Considering when we were starting the year, we were looking at a more gloomy picture about a potential recession on the cards.
Yeah, it's been quite a ride. It's hard to believe it's only 4.5 months into the year. But when the reciprocal tariffs were initially announced, the rates were very high, much higher than what markets had anticipated. It looked like it had been decided more on the trade gap between countries rather than the trade tariff differential between countries. So it makes it trickier to lower those kind of tariff rates. Fast forward to now, of course, we've seen recently trade tensions between at least US and China dial down. So I would think, yes, in the immediate period, trade tensions, have pulled back, but I wouldn't count on, this to last, in the sense that this is going to be an ongoing exercise. I think each party needs something from the other. So down the line, if some of the preconditions are not met, we could see some of these tariffs being reinforced or increased. But for the time being, I would think we could say, and our base case has also been that the US is not dipping into a recession this year, but growth is going to slow down. That's what we're playing with for now.
Okay, let's unpack what's on the table here. First, if the US-China trade deal of sorts, a bit of a compromise. What do you take away from the discussion? What more needs to be done in order to regain investor and business confidence, considering the fact that in the past earnings season, we've been seeing a lot of withdrawal or even reduction of projections and forecasts because it's been so tough to navigate what's going to be happening around the corner?
The only bipartisan topic or a theme in the US has been trade tensions with China in general. And this has been ongoing for the past 7-8 years. Of course, right now, because of this reduction in tariffs on both, right, US reducing on China and China reducing on the US, has helped. I think it's helping business confidence. It's helping at least risk markets. Risk appetite seems to be making a tentative comeback. But again, like I mentioned, I think this is going to be an ongoing theme. And there is generally an understanding that China has developed competitiveness in many fields, especially when you talk about electric vehicle, obviously electronics, reaching soon in semiconductors and pharma and all of that as well. So they kind of dominate those sectors where US also wants to have a stronghold. So I would think compromise between the two big countries is a blessing for all of the other key trading partners. But the devil really lies in the details. They will need to make sure the nuances is something that they agree on. And they, agreed to maintain peace. If you go by history, it's usually a bit up and down. We really don't see these things moving in a linear fashion.
Yeah, looking at agreements that we've been hearing about, we've got a UK-India trade deal as well. And it seems like folks are starting to reconsider their relationship with the US when it comes to trade, maybe becoming less reliant on it to some extent. So what are your biggest takeaways from the UK-India trade deal? How much of a boost is it to their economies?
So it is, and India has tended to be a bit more open to bilateral trade deals rather than multilateral trade deals. Like the RCEP or CTPPP, they have preferred not to join those and prefer to do bilateral one-on-one because then the terms of trade could be clearer. Insofar as UK and India are concerned, UK is India's 16th largest trading partner. If you take goods and services together, the amount that they trade in is roughly about 60 billion. The plans are to double that over the coming decade. So certainly a sizable amount. Right now, the partners are about 3% of each other's share in exports. But, this would likely increase. And you've hopefully, in terms of refined oils, pharma exports, gems and jewelry, textiles, all of these are some of the sectors that could benefit, apart from alcohol and automobiles as well, that could benefit from this trade deal. I think this is, again, like you rightly mentioned, a signal that more countries are looking to strengthen relationships bilaterally, not entirely be focused on the US, while US still remains a very important market, but look at which other countries or markets that one can work with. And certainly UK and India seem to have found that. And India is also looking to sign a few more FTAs down the line, especially with, say, European Union, for instance, which is all in the pipeline.
Yeah, to that point, how much do you think the UK-India deal played a role in putting pressure on the US to do more deals? Because everyone else is making deals and they need to be part of the equation to some extent. Are we likely to see other countries step at the pace to do more bilateral trade deals in that sense?
Certainly, so I would think so. I mean, at this point, most of the countries are reaching out to the U.S. I don't think the U.S. will see UK-India trade deal as a necessary source of worry. U.S. in itself is quite interested at this point to make sure that the countries that have a trade deficit with it to try and address that gap. So their interest is all in which are the countries that are reaching out, what kind of negotiations can be done. So from that point of view, I would think UK has again been the first one to close a deal with the US and now China. So I think more of that is likely. And India is also one of the countries which could be the next few to sign a deal.
All right, separately, you keep a close eye on what's happening in South Asia. So we've got the India-Pakistan tensions raising some concerns about how much it might affect their economies and the markets. What are the risk levels right now that are happening, and what are you looking at more closely?
So yes, this geopolitical tension that we have experienced in the past, say about 10 days or so, certainly did flare up, and I think you did see quite a bit of escalation in the bilateral tensions. And here, this relationship has been a bit tenuous for quite a few years. So I think at this point, because of the ceasefire that was announced over the weekend, I think in the near term, temperatures have cooled. Certainly, when you saw the escalation, you had the Pakistan financial market certainly take a hit. India also saw some impact, though it wasn't as strong. And I think, thankfully, now there's a ceasefire, but both parties are still on their guard, trying to see if there is any signs of aggression from the other. But otherwise, things have been pulled back. Some of the civil airspace has been opened up. Commercial flights have been resumed. So it's a good step for the financial markets, which already is dealing with a lot other risk factors locally and globally. But I think this is, again, going to be a simmering theme. But insofar as temperatures remain, tensions remain cool on both sides, we do expect the ceasefire to hold.
All right, hopefully we are heading into a more smooth sailing second half of 2025. We've been in conversation with Radhika Rao. She is the senior economist for DBS Group Research. Radhika, thanks for your time this morning and thank you for your insights as well.
Thank you, Ryan. Have a nice day.
All right, great chatting with you. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.